We have 28.1350, which I'm sure will move before we open. And NQ, which is minus 50 to start the day, is 69.04 and a quarter. Oh, where did that go? That's not good. That should not have happened. Where was that? Oh, that was right up here. Okay. Format. 4 and a quarter. There we go. Globex high came in at wow, way the heck up there. 80. $69.87.75. And ES came in at, so glad I wasn't up last night, 28.37 and a quarter. Okay. So good morning, everybody. Let's get started. Really quick, my name is Simon. I'm with toughtrader.com and Trade and Perform Coaching. This is the preview for ES and NQ. Quick legal disclaimer. You can take time to read it if you'd like later. This isn't in full, but basically it says past performance is not indicative of future results. Let me make sure this is working. Past performance is not indicative of future results. This is for educational purposes only. I'm sharing my trade plan with you in hopes it'll make you a better trader. Please be aware you can lose all your money trading futures and more, okay? The risk is significant if you do not know what you are doing, period, end of sentence. Please have a risk plan. If you don't have the ability to stop trading when you're down, you should not be trading, period. It's just too hard to make the money to trade to give it all back quickly, okay? So a couple of obvious risks right out of the gate. First of all, open drive lower, right? I'm going to stand aside the first 30 minutes. Why? As you can tell from the overnight price action, we've had expansion and rotation overnight, right? Look at the volatility in the last 12 hours on NQ. Okay, so here's ES on a 24-hour. Okay, let's go to a higher time frame. Okay, there's on a 24-hour basis. We have just been making huge rotations, right? 20-point rotations in NQ. The first thing you'll notice is from the overnight, right? We are expanding rotation overnight is getting wider, right? And the rotation, and that usually leads to US sessions being wider, right? I don't like getting run over early in the day. It makes it really hard to concentrate, especially once it slows down and other traders get tired, and I have an easier time after the first hour. Okay, so this is the rule in the room. If I point out a trade or even if I take a trade in the first hour, right, this is to help people who get triggered, right? If I go, hey, I'm long, and your plan is not to trade the first hour because if your account is in such a state or you're in such a state that you take a stop because it's a fast market, you should pass. There's no question about it, right? If I'm looking at an area and I'm going, it's a fast market, I'm taking a shot, I'm either reducing trade size or I'm willing to accept the loss, one of the two, and I'm going to roll on right to my next trade if that occurs, right? But for a lot of traders, if the stop comes fast or too fast for them to respond to it, and then they get wiped out emotionally, it offsets them, and they can't take easier trades as they come up later in the day. Don't let that happen to you. A lot of the trades on a day like today will come after 10 a.m. A lot of the easier trades will set up versus prior to 10 a.m. Central Time. Okay, NQ. This has been the really wild one. And we have Amazon and Apple earnings tonight, and people are very concerned about the Apple numbers on the iPhone 10 has gotten a lot of negative press, which just means they're set up for an upside pop, probably. But nonetheless, it's there. Let's get rid of that. So look at the swings that we've taken, right, where we've pushed down, we've pushed all the way up. So here's yesterday's session, right? We got crunched, right? Here's yesterday's session. We got crunched. We rolled all the way down. We rolled all the way up. We rolled all the way back down, right? These moves, these are 50-point moves in pretty damn quick succession, right? These are $1,000 a move if you get your location wrong. NQ, a lot of people gotten used to trading it with 10 and 15-point rotations. The deal has changed, right? And expect the first 5 minutes of this thing, the way NQ's trading pre-market, to be wild. The other morning, right here on the open, if you printed the opening print trying to catch the reversal, you took 25 points in the first 1 minute of trading of loss. That's how fast it went down. That's $200, $450, $500 in 1 minute. Went down. There was no way to get out of that trade, right? It was just so fast and it was illiquid. So I'll be staying away from the open because I can already look, and I don't care what the rotation is. I'm pretty sure I'll get set up for later in the day. Let's go look at structure, okay? So we can get, oh, one other note, and this is important for the guys in the room, right? This is the chart from yesterday on ES. I want to go through this, right? If you will look, we pushed right up into a yellow zone yesterday and rejected out of it, right? We pushed right into the white zone. The first push into the white zone was worth 2 points. I do a lot of work on the zones. Even though I'm not directly trading them in the room, I am looking for a response out of this area. The white zones indicate the same thing. Buyers are in control above, sellers below. You'll see once we got underneath, we get a big extension down. We didn't quite make it down into support. This is what I was looking for. Obviously, we're trading 28.11, so we're probably going to tag this 28.09 this morning. That is last week's low, by the way, so don't be surprised if someone tries to step in and push it back up, right? And we pretty much found the turn in here yesterday afternoon in the room, right, by finding the divergences in delta. So, but the point behind that is just because I'm not calling out the trades, the most basic and straightforward way to use the charts, first touch of the zones, right? And I'll give you NQ as well so you can see this. It's important that we don't lose track because I'm pumping out so much information intraday, okay? We pushed to the open gap. I wrote right in here, top of open window, Dalton's gap fill, 69.84 last week's value area high. We got underneath that, big roll, and you can see we backside tested that to the tick before we rolled down. Here's the white zone. Notice that we tagged the white zone to the tick before rolling back up, and it was a big roll up. That was a roll from 69.45 all the way back to 69.80, right? That's pretty fat P&L for my zone traders, okay? And then you'll see once we cleared underneath, we backside tested, we pushed, and then I don't think anyone got run over here because I was pretty clear. We probably tagged value area low, and you could see the responsive buyers come back in, right? So now let's jump to today. I'm going to close this down. Okay, let's get rid of this. Obviously, I'm going to have to adjust Globex lows when I have a chance, but I'll handle that in a minute. Okay, now that I got the important part out of the way, which was to slow the heck down while you're trading today, let's go to the TPOs. Okay, so let's get a perspective on ES first, then we'll go to NQ. So remember, when the market's going fast, ES is actually easier to trade and manage risk-wise than NQ is by miles, okay? By miles. There's no question about it. So from the weekly perspective, where we're at, okay, so this is this week's profile developing, right? We have value area low from last week. That's a key area, and you'll see we keep pivoting around it. 28.31. We're opening up underneath value area low from last week. 28.54 is above. You'll see that we keep, and what you'll notice here is we are starting to just fly through this area. So the first thing I have in my notes is expected to be pretty slippery above 28.31.50. If you will recall, for guys in the room yesterday, the stacked sell imbalance came in at 28.32. Right? We pushed below, pushed back up, got behind those panic sellers, and then we pushed all the way to the other end of the range, right? That was yesterday's range. So for this week, what hasn't been tested? So the problem with the value area high from over here is that this has been tested. That's 28.08.50, which is essentially where we're trading right now. That's also last week's low. You see that? So my guess is they're going to try to hold. Now, what I think is a more appropriate place, if I were going to dig in and try to take a long side trade, my guess would be from the prior week's volume point of control at 28.04 to 28.02. You have an anomaly in the weekly profile. You have a TPO point of control and a volume point of control. I would look to see if they don't respond back above. Below that, you'll notice that it's pretty slippery all the way down to 27.48, but that's from a weekly perspective, right? So almost zero chance of this happening here, right? Almost zero. So what's behind here that would help us out? Well, there's an anomaly right here at 27.95 to 27.93. I would expect a response, and then untested value area low at 27.90. If we get down into those areas on ES, right, we're trading 28.11 minus 15 points, right? If we add on another 10 points to that, that puts us down at 2,800, right? Right into this point of control from the prior week. I expect a response in this area. If I don't get it, right, I would expect a response from this area. This would put us at over a 30-point stretch. I do not expect it to make it past 27.90 and a quarter, and I am looking to swing hard out of this area, right? Even if we close at the low of the day, I'm willing to take losses in this area for a pushback first to 28.03, and then hopefully to push back to possibly last week's value area low. But of course, that's all going to hinge on Apple and Amazon right there. But that would be my, if we get down here, my guess would be that we come back to 28.31 after Amazon and Apple's earnings, or sometime on Friday afternoon. That would be my guess is where we end up, right? Why am I saying that when it looks so ugly? Well, I want to remind everybody, right? Again, we're on the weekly. Look at perspective, right? And it helps when you have perspective so you don't freak out. Okay, so number one, this is a weekly chart. Look how few weeks push into, so here, let me stretch this out. Okay, I'm just going to slowly scroll back. Look how few weeks actually get below the prior week's value area. And if we do, we tend just to push them to the week before's value area and respond. We have not done any more damage than that, going back a long way. I can keep searching here, but there's almost no place where we have pushed down and exceeded the, in this case we did, but we still didn't get out of prior week's value area, right? And this is all the way back to September of last year, right? There's just no place where that's happened. Okay, so I understand that we're significantly extended, but I just don't see us getting past, even if it gets extreme, I don't see us getting past 27.68. It just hasn't happened in a long time. And if it did, it would be a change in character for the market because it just hasn't happened in such a long time in this bull run. So 27.90 is where I'm looking to stake my claim. You should have that written in your notes so that we can start looking on the smaller patterns for where the reversals are setting up. And this is where my options traders want to be looking for shots back to the upside, right? Okay, next, let's go look at the daily picture. Okay, from a daily perspective, there's an anomaly sitting right here underneath value area low at 28.21 to 28.20. If we bounce, I expect to see a rejection at that area first time in, between that and the value area low at 28.2275. The first thing I want to look at is if we spend the first half hour, hey, thanks, Dan. So if I look at the first half hour, right, and we haven't closed back into value, which is 28.22 3/4 within the first half hour, I'm going to assume we're going to have a trend day down, okay, which means I want to see stopping of the one timing to the downside. So this is for my most conservative traders in the room, right? I'm going to go to our last down day over here. Let me go back to the 16th. Okay, what do I want to see to stay on the safe side of life? I want to see, this is one timing to the downside. See how we can't get over the last half hour? We do right here. And if you'll notice, and I promise you, even within here, you were able to get a profitable trade off before it just rolled you. Okay, because these are 30-minute bars. So the one timing ends, the 50-60 back, I'm sure you're able to get some kind of scale. And even if you weren't, what this does for you here, let me show you. So let's say you took this trade. You came up, and with all our tools, we figured out you still took the 50-60 back, and it still stopped you, right? Closed behind and stopped you behind. So first of all, that's a good thing because what you are looking for is a reversal back to the upside for a big swing. When one timing stops ending, you're looking for a swing back up. Where's the next place that trade sets you up? I'm trying, because what happens once the room opens is I'm going so fast, right, that we lose perspective of the 30-minute picture. That's why I'm trying to keep that 30-minute picture up front and center for you for my more conservative traders so that you don't get lost in the minutia. This is the next place right here. We stop one timing to the downside. If you will notice again, even if you had taken a stop over here, you come back in, you set your 50-60 retrace, that tags you in. Notice when it works, it doesn't even get behind the 62 retrace when it works perfectly. So I want to qualify that remark. It can go all the way down to the low and still be functioning. Ron, what did you tell me, buddy? I missed the comment, unless it was from yet. Anyways, it'll be very interesting going into tonight. Notice that it never gets behind the 62 retrace, right? So on this trade here, you can simply put your stop on a close behind the 62 retrace and bailed. That's a little tight for me, but what I'm going to do is start looking for divergences once we get into this 50-60 to take it the other way. And you're correct. The stop would be pretty massive from the 50-60 to the swing low. So the way to adapt that is if we close behind the 62, bail on the trade. But what you end up getting is very nice swings back to the upside. And oftentimes what you end up with for my options traders is you end up with big swings. Also notice that this 50-60 came where there was no support off to the left. This was a holiday day, and that's why we're trying to save it against that holiday. If you look, once we pulled into the prior day's neighborhood, right? And then if you'll notice, we completed, just like I note where we complete the auctions down, the auction was completed down over here. And I always say this, right? Just because the auction's completed down or the profile's repaired does not mean that we can't push behind it. We can. What you're looking for, and what's actually better is if we do push behind it, then get back above and start working against that. It ends up being a trap area, okay? So for today, my more conservative traders, if you can stop one timing on the downside on the 30 minutes, which I'm pretty certain we're going to have today, right? I'm pretty sure we're going to get a roll to the downside. You save yourself stops, right? Now, you may miss some good rotations and some good trades, but your results long-term will really rise up if you'll wait for that one timing to end. And occasionally you end the one timing and you don't get the shot, but there's a ton of examples where you do, right? And I want to show you something here. If you look through yesterday, we stopped one timing right over here. See how sometimes it just U-turns around? That's the price you pay. Also notice when we came down here, the one timing stops right here. And I'm pretty certain had we not had the Fed come out, which is what this is, you would have gotten a nice gentle rollback on a 50-60 back for a pop back to what was eventually 28.34. Okay. So importantly, you'll see we're trading down at 28.13. This was a poor low. It needs to be repaired, right? And that the next point of control, so these are the point of controls. This is the weekly, that 28.04, 28.02, and you'll notice that there's a TPO point of control and a volume point of control right in that 2800 area. I expect them to attempt to give a responsive buy out of that 2800 to 2806 area. Let's just call it that area. I expect a responsive buy. Below that again, you'll see we're rolling down to 2796. And when we look to the left into that 2796, 2790, 92. Okay, what you will see in that area from the profile. So this would break the swing. That's all right, right? But what needs to be repaired in this area? So there's an anomaly here. It's already been tagged. See this? Got tagged. So I would go and look to this low volume node that's right at the back of that 2790. And then this chart is repaired once we trade down to 2788 to 2786. So remember how it did it back on the 16th over here, right? What we did was we got to the part where the chart had to be replaced. So please write that down, 2788, 2786. That profile is repaired, right? So the way it did it was it pushed all the way through, pushed back in, backside tested that, and then pushed. I'll be looking for that pattern, okay? Blow it up, push back above, backside test, and then push back to the upside, okay? And then finally, if you'll look all the way down here, I don't know why this didn't carry over. It didn't get tested, but there's a volume point of control if it gets really sloppy, right at 27.7850. That's a huge stretch. Expect a response there, okay? Anyone have any questions over ES? I'm going to jump to NQ here in just a second. Guys in the room, we all cool? It's going to be hard today because people are nervous about Apple's numbers. Understand that. If you're trading NQ, people are very skittish on Apple, okay? And Amazon launched the last rally. Okay, if you go back and look at their last earnings, that was a Friday. We were down. Here, if I can find it, I know where it is. It's right over here. Where were we? It was December. It's that right there. We had pushed down. I'm pretty sure it was this date right here. We had pushed down, and we were just having a hard time getting back up, and we gapped and ran, and that was the launch of that rally, and you can see it, and you can see it in the pictures. It just kept going. It might have been this date as well. Maybe I'm wrong. Maybe it was 11/28 because that would be 30 days. So I apologize. Either way, that was the launch of that rally. You'll see we were just trading sideways, and from there it just was rocket ship time to the upside. Right? Everything else was just small stops along the way, but we were really just pushing all the way through there. So anyways, that's my two cents about that. So you're going to have two opposing very big earnings numbers come out to the market. Expect end of the day volatility to be stupid. I'm probably not trading the end of the day today because I don't like to get run over, and everything will be normal after tomorrow. And I'm skipping the first 30 minutes for sure to let them go through it. So let's go do NQ really quick. I really feel pretty relaxed, guys, in the room. We'll be looking for the divergences and the sell imbalances through the course of the day to get us set up. Okay, so let's go to the weekly perspective on NQ. Okay, number one, value area low from last week, 69.14. We're trading right at it. You see, you'll see that we've tucked right underneath it already once this week and gotten back above. That 69.14 becomes a pretty important area because it was the trap location from the gap down Monday or on Thursday, or was it Tuesday? Whatever day we gapped down on, that was the trap location for the push all the way back up, right? The next area that has not been tested, so this is where we launched the rally from. I'm pointing from right here, right? There's an anomaly right here on the weekly. See that? 68.62 to 68.49. I am looking. And then you have the prior week's TPO point of control and volume point of control, and that is 100 points down. In this entire area, we have reason to think we will start to slow in momentum and get responsive buyers. So I would have it written in big fat letters, 68.62 down to 68.17. That's a 50-point range, so we're going to have to put some structure together to understand, but I do not want to be shorting here for any reason. I do not want to be shorting against this entire area right here is dangerous. Now, if we get underneath 68.17, the most logical area is a setup around 67.83 to 67.73. Almost inconceivable that we get there, but hey, market can do anything, right? So I'd write at an extreme 67.83 to 67.73. There's a low volume node right in the middle of those two locations that I would have marked down, and that's approximately 67.96, and that's also obviously 6,800 is a round number. So this is how it goes. Weekly, low volume node, 6,800. Anomaly that needs to be repaired, 67.83 to 67.73. Look for a trap back above 67.83, 67.73 back up. Look for a response out of the 6,800 the first time in, and look for a response on the 66. All of this is response area, right? What are we looking to see is a stopping of the one timing in this area, and then backside test of these key areas to get launches back up, okay? If we can even get down there, there's nothing to say we can't open drive higher, right? That's if we get back down there, okay? On the upside perspective, 69.50, 69.40 has been the point of control, and it's becoming a high volume node. If you look at your profile there, right? That's going to be an area of resistance. If we can get back above 69.14, look for a retest of that 41.51 area from the weekly. And we are not breaking out until we can get above 69.84 and consolidate above it and push up. Okay, so that's your two sides of your perspective. So tomorrow, if we gap above 69.84, you've still got to clear this anomaly that's building up here. This is overhead resistance, right? So what you want to see is a push in and an inability to get back below 69.84. I don't think that's an issue for today, so I'm not worried about it. Quite frankly, my focus is pretty much between this 51 and this 68.62 to 68.17 neighborhood. Okay, let's flip that over to the daily and see how these overlap. If we can make anything out, usually just looks like a bunch of mush. Okay, So we just opened up. Again, I'm not ready for the open. Let me get the tick in really quick. I'm not even bothering with the first. Let me get the tick in. Negative 800 on the tick. Advancers, decliners are Advancer 700, decliner 1623. It's the first minute. We need to give it at least 5 to 10 minutes to get the whole rotation open up before we have a clear picture of those numbers. Okay. And you can see they are already going for the whipsaw. We're backside testing Wednesday's low. I'm just staying out of it right now because I don't feel like handing anybody my money right out of the gate. I'm pretty sure I'll get some setups. Okay. Now you'll see this should be our first. That's the value area low, the 69.24 is value area low from the 30th, right? We tested it. We punched back above. So I would look for a backside test into the 69.24 area, right? And if it fails, that sets you up for the roll to 66.82. You'll notice, see how there's no pink or blue lines here? There's no naked points of control anywhere in here. This can be a very, very slippery area through here. Please, please, please be aware of it. So see how we're getting above 24 now? That's going to be the trick to keep the market moving one way or the other. Well, 1 second here. And look at them attempt to open drive higher right back into the point where it's right to the point where it's very difficult to maintain the momentum. Hold on 1 second here. So that's the first punch in, right? They've got to maintain above Wednesday's low in order to drive higher. We'll see what they end up doing. My guess is we're going to explore last week's low is the logical place to take the market, right? If they can do it, I don't know. And you can see that there's so many people willing to jump in almost instantly, right? That it always becomes a bizarro landscape for us. So if we're below 69.14, right, we can't hold that area. And for the first key to that will be getting below 69.24 and then rolling back underneath. And I expect if we get underneath the 69.14, there's a lot of room. This is where this can get very slip. Oh, you can't see. Sorry. This area is where it can get very, very slippery. You'll notice, also be keenly aware, this is where they've responded back up 2 times in a row, right? Oh, I can't draw on that chart. That's why. From that 6,900, expect a response there. They tried it 2 times. You get underneath it, and that brings up 66, 68, 62 back on the downside. That's just this last 2 weeks, right? We've clearly responded 2 times out of there, so we'll see what they end up doing. Anyways, they're clearly trying to pull an open drive lower. I think that'll fail, is my guess. And if we get below 69.2475, I'd be leery below there, right? You want to see that act as its support or resistance area once we get below that location. Okay, that's all I got, guys. Remember, get above your last best seller or below your last best buyer, right? You'll see that even if you don't catch the upside swing because of that, what that will do will save you from the excruciating pain of getting ripped to the downside like this. Okay, even if it runs straight up, you get underneath your last best buyer, your last best seller, it'll save you an enormous amount of pain and hurt in your P&L, right? This is a hard trade to catch here. We actually did catch it. Hypothetically, we caught it in the room, right? We identified the turn, but it never backside tested. So just keep all that in mind, please. Anyways, what was I going to say? That's it. Looks like they want to drive higher. What else can you say? Nothing shocks me in this market, right? So they're just hell-bent and determined to push up, so let them do it. And like I said, it's hard either way when it's this volatile. Who the heck knows what anyone's thinking when they're pushing like this, right? So anyways, that's my 2 cents. Let's get to work, guys, looking at the deltas. And guys in the room, in the YouTube room, thank you for joining us. If you'd like to join us for regular trading hours, send me an email to tradeandperform@gmail.com, TRADEN at the letter N, perform@gmail.com. And appreciate you taking the time to join us this morning. It's been a long time since we've seen the markets quite this volatile, quite this quickly, but that's exactly what we're dealing with today. So anyways, I'll be back later this morning, guys. I'm surprised by the open drive higher, but that's what they want to do, and that's what they're going to do. So c'est la vie. Just incredible. You'd think that people would want to sell that open and they want to buy that open. I'm so surprised that we just can't get below and test these areas. You'd think that's exactly what needs to be done. Anyways, have a great day, guys. I'm going to end the YouTube. Guys, I'll be in the room in just a second.